Hey guys, welcome back to Quarantine Investors. I figured while this coffee is still kicking strong, I'm just going to jump into a part two. I watched over the last video, and there's a couple things that I wanted to touch on a little bit further. Um, One is exactly where I am sitting right now, and um, I didn't want to confuse people. I'm not saying to like it's an immediate rush right now. You got to put your money in these things. You got to get rid of your money quick. That's not what I'm saying at all. I'm actually sitting right now in somewhere between 80 and 90% cash. And I'm comfortable being in cash right now because there is a lot of catalysts that can create a lot of volatility, and we might not be seeing it right now, but it can come up. It could quite possibly pop up anytime this year. It could be next week. It could be a few months down the road. So what I'm basically saying is uh, these are things you want to be looking into right now, and how you want to diversify your portfolio and your investments. One of the things I mentioned in the last video was REITs. And I wanted to kind of touch base on that because this is a sector that I've really generated a lot of my wealth in the stock market on. And it's because I kind of understand how that works and its relationship with the economy. And it's a lot easier to make those connections with something, you can actually see. It's kind of like when you have your cash in your bank account and you can see it and it's there. When I'm buying REIT stocks, I can actually go to these buildings and these developments and actually see where I put my money. Like I'm basically purchasing part of ownership in these developments or buildings. They're real estate essentially. I'm buying a property like a house or a condominium or whatever it may be. I own part of that, and I'm collecting some of the dividends and share that comes out of that, whether it be they're renting it out to tenants and those tenants pay rent, and then that comes out in the form of dividends to me as an owner. So I can actually, in the past, I've invested in REITs located in downtown Toronto. I can actually go to these buildings, see how well they're doing, how they're looking, and that sort of kind of gives me peace of mind because it's like I'm buying real estate essentially, but I don't have to deal with the management aspect of it. When people are having to, their tenants say, "Oh, my toilet broke," and or I know we got damages here that need to be fixed and this and that. We're not paying our rent. I don't have to deal with any of that. So I just every month, and a lot of them pay monthly dividends, which is great. I don't like waiting for a quarter. I want to see that money in my account every month, like a salary. I'm putting my money to work and it's paying me out and I see it like a paycheck. That's what I like. And when you can start to see that and realize that, you can really start to see how compounding interest and dividend growth and reinvesting dividends can actually grow your wealth. And that's what I've done for many years leading up to this crash in 2020. And that's when I started to see like things were really going crazy with Trump, sort of like hyping up everything, and the stock market was going crazy. And I was like, you know what? I've been in the market for 5 years. I've been collecting dividends. I've seen growth, capital gains in a lot of my stocks. I'm gonna sit this one out and sort of watch from the sidelines. And it was a good year for me to kind of cash out on all those capital gains as well. So I did that right leading up to 2020. And then when the market crashed, I was sitting cash heavy and it was great. And I was like, okay, things are crazy. I waited, I was patient, got in at the bottom, things started going up. And that's where I was like, yeah, something's not feeling right here. So I ended up getting out of a lot of those positions because I just felt like, we could have a lot more, tougher times, a lot more. It's kind of like if you picture like when you get like a volcanic eruption or something like that, and it creates, um, that earthquake or whatever. or you get this minor earthquake. And then what people realize, okay, the earthquake passed, everything's good, everything's going back to normal. But then all of a sudden, like a tsunami hits because that earthquake triggered this. And it was way down and it was, coming along the water and it took a while to get there. But when it hit, it was like, oh man, that was way worse than the magnitude earthquake we got. So yeah, I'm pretty skeptical right now of where I put my money and how I'm positioning myself. And I think that's really important. And you have to be aware of that as well. You don't want to just go and say, oh, cash is going to be trash. I need to dump it all into something. Yeah, you go and buy real estate right now and you're paying like up the ass for a house or wherever. And then all of a sudden, we had these other factors at play, like mortgage forbearance, eviction protection. If all these things start lining up bad, you could see a huge drop in these asset. Like we have this asset inflation now. You could see things come back to reality, and like, that's not something that you can rule out right now. And I think that's important because uh, you don't want to be jumping into anything where it's at the top and now you get caught riding all the way down to the bottom, and it might take 10 years, 20 years to get back up there. So I think with all these things at play, sitting on a lot of cash right now throughout 2021 is good. That's something you want to do because you need to be ready to jump on these opportunities. If we do see those things line up and you know, forbear, like these things are running out of time now, and you could get, people not being able to cover the mortgage that they had forbearance for and possible evictions. And if we have that, you're going to see the banks sitting on a lot of properties that is costing them money to sit on, and they're going to want to get rid of that because it's pretty much a liability to them. They're not making money, they're losing money by holding all these. They're going to look for people with good credit. They're going to look for people who have cash. They're going to look to get rid of these so that they can generate themselves some money, sort of like the 2008 crisis. And that's kind of where I actually used as a gauge to when I stepped back in the markets. I was sort of tracking that as the markets were falling in March. I was like, okay, we're seeing a lot of things come down to those 2008 levels right now when we had that financial crisis. And that's where I was like, you know what, it's time to get in. And if you didn't get in then, now is where you kind of want to be sitting with that cash and being like, okay, we might have, a second opportunity like that over this next year. So anyway, I just wanted to touch base on that. And I don't want to misguide anyone. So I feel better posting this part 2 video. So at least, and that can maybe give some of you peace of mind who feel like you missed out on that 2020 skyrocket, but you just got to know like that wasn't real growth. I mean, some of it, yeah, but a lot of it, you have to kind of take with a grain of salt or sand or whatever they would say. Anyway, I'm gonna look to cover some more stuff in the near future while things are sort of just figuring themselves out, and hopefully it'll help you guys out. Do me a favor, like the video if you think it was helpful. Don't be afraid to reach out to me, comment in the video, and subscribe and check out the Discord. Thanks, guys. I'll catch you around.